Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing by OraSure Technologies, and let me tell you, this deal they made is either going to be a stroke of genius or a financial headache. We'll see which one it is. OraSure just bought another company, Sherlock Biosciences. Now these kinds of deals are always interesting because they change everything and we need to know what the deal is. So let's jump into this filing. But before we get started, if you are into getting straight into insights from corporate documents, then make sure you are subscribed. We also have a Discord community linked in the description below, so come join. This isn't just a regular report, it's an amendment, meaning they had to go back and fix something in a previous report. This one relates to the acquisition or buying of Sherlock Biosciences back in December of 2024. Think of it like realizing you forgot to add the price tag in a garage sale, so you rush to correct it. OraSure Technologies officially acquired Sherlock Biosciences in December. This filing is to amend a previous report about that acquisition. This tells us that something about that initial report wasn't quite right, and they're cleaning it up now. Basically, OraSure bought Sherlock, and now they are making sure all the paperwork is in order. The main point of this amendment is to give everyone a sneak peek at how the combined company OraSure and Sherlock together might look financially. They are presenting what's called pro forma financial information, which is like a what-if scenario. It is like saying, if we have been one company all year, here's what our financial statements would have looked like. This helps investors understand the potential impact of the acquisition. But remember, it is just an estimate. This exhibit contains unaudited pro forma combined financial information. This means these numbers haven't been checked by independent auditors and are based on estimates and assumptions. Tab to now, let's dig into those numbers to see if they are promising or concerning. Alright, let's get to the meat of it, starting with revenue. The combined net revenue is about $321.9 million DN. Think of revenue as the total sales before any expenses are paid. Next up, cost of revenue. This is how much it costs them to actually make and sell their products. In this case, it's roughly $172.3 million. That means the gross profit, which is the revenue minus the cost of revenue, is around $149.6 million. It's what is left over to cover all other expenses. Then you have research and development, or R&D. This is where companies spend money to create new products or improve existing ones. OraSure spent $47.7 million this year. Spending on R&D can be a good sign, as it shows they're investing in the future. Selling, general and administrative expenses, or SG&A, are the costs of running the business, like salaries, marketing and rent. These came in at around $112.8 million gross profit. Finally, and most importantly, we arrive at the net loss. The combined company had a net loss of about $20.6 million. This means that after all the revenue and expenses are accounted for, the company lost money for the year. In short, OraSure spent more than it made, even with Sherlock added in. So what does all this mean? OraSure bought Sherlock, and the combined company is currently operating at a loss. This isn't necessarily a disaster, especially if the acquisition is expected to pay off in the long run. So now, let's talk about what all these numbers mean. OraSure seems to be betting big on growth through acquisition. Buying Sherlock could bring new technologies and market opportunities, but it also adds complexity and costs. A combined net loss of $20 million raises questions about whether the deal is paying off. It's possible that integrating Sherlock will take time, and these initial losses are part of the plan. One thing to keep an eye on is their spending. SG&A expenses are quite high relative to their gross profit. If they can find ways to cut costs without hurting growth, that could improve their bottom line. Another key area to watch is R&D. Their investment in research and development signals that they are trying to innovate. If these investments lead to successful new products, it could drive future revenue growth. For investors, the big question is whether OraSure can turn this acquisition into a profitable venture. The initial numbers aren't great, but there's still potential for long-term gains. The key is to watch how well they manage cost, drive innovation, and integrate Sherlock into their existing business. Alright, that's our breakdown of OraSure Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.